Let's start this episode just like we did a week ago with the Halliburton Baker Hughes deal, which is now officially off. The $35 billion deal is off. And as you said last week, Taylor, all signs were pointing to this. I'm a little curious, though, why Halliburton shares up about 2-3%, Baker Hughes shares down about 2-3%, because Baker Hughes is getting the mother of all breakup gifts in the form of a $3.5 billion check.
Yeah, they're already planning to spend most of it.
Right.
Yeah.
So, I mean, is Baker, I guess my question is Baker Hughes seen as that challenged a business that even though they've just gotten an enormous check, that people think, yeah, I'm still not interested in this company?
I think it might just stem from the fact that they're no longer getting the premium that Halliburton was going to pay for their shares. So maybe some investors are like, maybe it's going to take a little bit longer to get to where we thought Halliburton was just going to go ahead and hand us some cash and some shares. But they're spending it on share buybacks. $1.5 billion or so is what they said. So that's a little over 7% of outstanding shares. So their company could be getting a deal over the next week or so if they start implementing this anytime soon, because shares have sold off. So that might help shareholders in the long run with some returns there. And then the other billions going towards debt. So they haven't made any announcements of like, we're ready to grow the business in this cheap environment yet, because as we've seen, the run-up in energy shares might have taken away some of the deals had this been called off only a month ago when oil was still below $40 a barrel. So I expect them to use the other billion on small tack-ons, but nothing like that's been announced yet. So maybe the market's just kind of waiting and seeing, because Halliburton, you kind of understand what's happening to them. You can strip that cash off their balance sheet and see what's happening. But Baker Hughes now has some decisions to make, so maybe some people are hesitant as to what those decisions might be.
Yeah, I mean, if you put it in the context of Halliburton as a stock, I mean, if you look at the shares outstanding versus what they're paying out in this $3.5 billion breakup fee, it's like $4 a share, and so it's not something that kills the business, and so then we know investing is all about the future and seeing how the future may shake out. It's no secret that Halliburton is one of the strongest energy companies in the world, and I don't think that's going to change. It wasn't going to change before the acquisition. It's not going to change after. I think really the question then becomes, going forward, when do we see this recovery in energy? And like Taylor said, I think Baker Hughes, there are many more questions for them than there are for Halliburton. I mean, this sucks if you're a Halliburton shareholder.
Yeah,
principle, right? I mean,
billion.
I feel like they just kind of throw $3.5 billion out there as just sort of a, who cares? You just start suffering that sort of big number syndrome where you can just make it this big number and it's just you can't even comprehend anymore. And that's kind of where you are here. I think it makes you think twice as an investor, right? You don't want to see a business throwing away $3.5 billion like that, but it is what it is, as they say, and this is a company that can certainly withstand it. Halliburton's been a very interesting investment. I mean, if you look at the 5-10 year charts, the stock doesn't really go anywhere, but there are points in time where you can buy this thing and make a ton of money. And again, we've said it a lot over the past year. I mean, we don't know when things are going to turn for energy, but they will. And when they do, this is probably going to be one you want to own. Yeah,
and it's not necessarily in a bad spot now.
Right.
It lost some cash. Maybe the dividend grows a little bit more slowly. It would be nice to see them have that money to put to use in the low price environment, but I don't think they're any worse for wear in the long term.
Two questions before we move on. First, with respect to Baker Hughes, do you think part of what's happening with the stock is the stock buyback is being seen as, for lack of a better word, uninspiring? That is just sort of, and we've talked about this before, regardless of industry, there are plenty of companies that when they announce a stock buyback, you can sort of look at it and go, okay, well, they have no better idea for what to do with it. It's the fallback position. And I'm wondering if at least part of what's happening with the stock today is, wow, really? That's the best idea you have?
It kind of caught me off guard that they are buying back more stock than they are paying off debt or earmarking for potential acquisitions or whatever the other billion that they haven't announced yet is. So that kind of caught me off guard a little bit, especially with shares having risen. I don't know what Baker Hughes have done over the last few months, but oil shares in general are up double-digit % in just the last few weeks. So losing out on what could have been some deals before this announcement. And if it continues the way it is, they could have missed out on the trough to begin with. So I do think it's less than inspiring.
Yeah, and I would say also, I mean, we've seen data before that sort of talks about how poorly a lot of these businesses execute on the buyback front, right? I mean, the charts show you that as soon as the market starts tanking, they're battening down the hatches and just going into shutdown mode, when really that's when they need to be buying back these shares. So this is pretty interesting. I mean, in the case of Baker Hughes, I think this is kind of like found money.
Yeah.
And given the position of the energy market today, and that they are going to execute some buybacks with this money, I think this could work out okay for them, given how depressed energy stocks are. I mean, I could see them wanting to kind of reduce the debt side, but the debt they can manage with no real problem. And again, this is kind of like found money. Mm-hmm. Probably not such a bad use of that at this time. Given that so many companies have established such a poor record over time on the flip side of that coin.
Yep. Second question, should we read anything into the potential for mergers and acquisitions in the energy industry for the rest of this year? Should we read anything into what happened here, or do we just sort of look at this and say, you know what? Part of this was it was the second and third largest player in the space, and that was the problem that the Justice Department had with it. And really, it's the opposite, because I think if I heard you correctly, Taylor, you sort of hinted that Halliburton may just turn around now and start to go looking for other fish.
They could. I mean, they're missing some cash to do it with,
right.
But maybe some smaller fish. Maybe they're a little bit more gun shy. But I think that they've had to take a much harder look at what they currently own in order to value it for potential sales, in order to have this deal go through in the first place. So I think that they're much more in tune with what they actually are now. So they could maybe spin off a couple things and then put some cash to use. But I don't think this is something that the whole energy sector has to be worried about. It was the number 2 and number 3 in an industry where the top 3 or 4 do have a commanding market share globally, not just in the United States. So I do think that this was probably a one-off. That being said, you're not going to see Chevron and Exxon try to merge, because that would be something similar on a much larger scale, but similar in terms of market share. But I don't think it's anything that you're going to see like a lack of energy deals because of this, just maybe not the same competitiveness in nature. But it reminds me of like when T-Mobile got some cash twice, I think a couple billion each time, once from Sprint and once from another company. And they went out and they spent a lot of it, which is why they're one of the fastest growing, if not the fastest growing mobile companies out right now. So that could be something that shareholders might be like, well, why isn't Baker Hughes throwing some of this cash around? But it is early still.